Yo, 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 guys, welcome back. Happy day after Thanksgiving. It's the host, Larry Thompson, another episode of Thompson's Two Cents. So, hope you guys had a great Thanksgiving. Shout out to those that are in the chat. At the end, we're going to do a little Q&A from some chart requests from last week. But kind of wanted to start with the theme today of being shake and bake. Little shake and bake. The Bears are getting cooked. As we kind of highlighted last week, in the episode of Thompson's Two Cents, which I recommend going and watching if you didn't get a chance to, kind of broke down that we were at the bottom of these levels. And in bull markets, you don't short the hole, right? And what have we seen? We've seen a lot of reversion off those lows, some strong rallies this week. So let's kind of get into it. I want to start here talking about shake and bake. Actually, didn't bake this, but this is my deep fried turkey. Set it in a wet brine for about 24 hours with some Cajun seasoning. Throw that puppy in the deep fryer. I'm here in South Carolina. We deep fry our turkeys down here. And it was a juicy, delicious turkey. So for those who hate on turkey, it's probably because you're not doing it right. So comment what you guys think is your favorite Thanksgiving food, favorite side, and maybe the most overrated. I think a lot of people might say turkey, but I think you're probably just cooking it wrong. Because turkey, man, it's fire. Also down here, we do mac and cheese. So if you don't do mac and cheese on Thanksgiving, you're doing it wrong. And my mom does some twice baked potatoes. So those are my go-tos. I think stuffing might be a little overrated. That's probably my hot take. Stuffing, pretty mid. I think it needs gravy for it to taste any good. It's basically just soggy bread. But I like it. But I think it's a little overrated. So hope everyone had a great Thanksgiving. I'm thankful for the guys that watch the show. I'm thankful for technical analysis. I'm thankful for the ability to share that with you guys. Thankful for Jean in the background. So let's kind of dive in. Shake and bake, right? If you guys aren't familiar with shake and bake, get familiar. So movie, Talladega Nights, Ricky Bobby with Will Ferrell. And I can't remember this guy's name, sorry. But essentially NASCAR drivers, right? And they have this maneuver where Carl Newton, right, drafts in front of Will Ferrell, Ricky Bobby, and they engage the slingshot. Slingshot engaged, right? And then they lets him run in front of him and win the race, right? So that slingshot setup that they talk about in that movie, which, like I said, if you haven't seen Ricky Bobby, great movie. That's where Baby Jesus quote comes from. That's where it ain't first or last. I'm going to be on you like a spider monkey. So many good quotes in that movie. But that's where that theme comes from. And that's what we're seeing in the market this week. I wrote about it on Tuesday. Kind of just wanted to highlight it here, how you think about it in the market. So starting with one of my favorites, housing. So you have ITB, XHB just overlaid. The line charts XHB, ITB is the candlesticks. You have the 200-day. What did we have? We had a break below, right? Where Ricky Bobby gets behind his partner and he drafts. The slingshot is engaged, as they say in the movie. Slingshot engaged. And then boom, breakout, right? This false breakdown turns into a whipsaw to the upside, which is common in bull markets, right? Because if you think about it, a lot of themes in bull markets are percent of stocks above a certain moving average or number of stocks that are making new highs or new lows. And the new lows list is kind of dwindles and the new high list expands. And the feature of that is that lows tend to revert, right? They tend to not see follow through. Even though this chart's been ugly, we've seen that slingshot kind of get engaged, and we saw that shake and bake this week, back above that 200-day. So now you kind of have clean risk reward for that short-term trade, which now, of course, is extended, but we'll get into that in a minute. But this is kind of that shake and bake pattern you'll see throughout the market that we'll kind of talk through. And to kind of piggyback that, the shake and bake, right, is that false breakdown where you have weakness and then that weakness quickly reverses to the upside. That's essentially what breath thrusts are, right? It's a violent reversion from bad breath. It's a violent reversion from bad breath to very strong breath in a short period of time. That's a thrusting signal. Okay, and so this is my friend Subu Trade, right? Great follow on Twitter. You want to follow him at Subu Trade. He put together this chart. This is back from May, but the data is still kind of relevant. So you have Jeff DeGraff, founder of Renaissance Macro Research, and then Marty Zweig, which I'll kind of talk about him in a minute. right? Marty Zweig is famous, wrote a book. What was the name of Marty's book? I can't remember off the top of my head. Read it probably 2 years ago. Winning on Wall Street. Winning on Wall Street by Marty Zweig, right? Two famous investors who kind of have quantified that violent reversion from bad breath. That's essentially what a breath thrust is. So if you want to dig into those, you can go online, look up DeGraff breath thrust, look up Zweig breath thrust. I won't get into the mechanics today, but essentially what you see, if both of those trigger around the same time, it's a great buy signal. So you can see 3 weeks later, 2 months later, 1 month later, what do we have? We have stocks up the majority of the time and up pretty bigly, right? So more than 10% a lot of these times, because these are kind of capitulatory levels where you have that violent reversion from weak breath, which is one of those things in bull markets, like I talked about last week, don't short the hole, right? You don't short the hole in bull markets because they don't tend to see follow through to the downside. And another great thing about this is when you zoom out on those weekly charts, you could see that we were kind of at the bottom range of these levels. So I'm going to put on my simpleton hat, my Thompson's 2 cents hat, and just show you guys a quick chart showing similar to breath thrust from a more simplistic perspective. So what we have here is the S&P 1500. You have percent above 20-day for the 500, 400, 600, 1500 all together. And this is the exact chart I showed last week where I said, don't short the hole. And I said, we want to see follow through from the bulls, right? The bulls, we wanted to see follow through. And that's what we got this week. So we were at the bottom end of these ranges, and now we're at the top end of these ranges. What is that? It's a breath thrust, right? Weak breath, violent reversion from weak breath to strong breath. That is a breath thrust, right? This isn't how they quantify it, but it's a way to quantify it simplistically. They have these oversold conditions that lead to almost overbought conditions, where in the short term, the market might chop sideways, right? Which you kind of see here, 70% up a week later. So there's a chance the market might chop sideways, but in the long term, it's a solid buy signal. So we kind of seen that across the board this week, and that's what this chart is just trying to highlight. And so what's cool about when Marty Zweig was around, he passed away in 2013, rest in peace, is that since then, there's been a lot of ability with ETFs to kind of quantify breadth without needing to dig into specific indices and things like that. You can actually use an ETF. So what I did today is I really just want to help you guys understand what a breadth thrust is and the significance of it and kind of what we've seen this week, right? So we're recording this show at the close of the market around 1. This chart I created probably 15 minutes before the close. And what we have on the top side here is 1-day rate of change. The bottom panel, we have 5-day rate of change. And then we just have the equal weight 1,000, right? This represents over 90% of stocks in the US market capitalization, right? Over 90% of stocks, right? From a market cap perspective in this. So this is a equally weighted 90% of stocks. I'll repeat that again, right? It's breadth. This is a breadth ETF. And so what we can then do is we can look at rates of change short term, right? To kind of understand, is breadth thrusting? Are we seeing thrust in breadth? And then I took that one step further from a physics perspective to kind of give you guys a twofold way to think about this. So 1-day rate of change, we had 5 consecutive up days in a row. So what do we have there? We have persistence in strength. And then in this bottom panel, I have the 5-day rate of change, which we can see it's the best since those April lows, that tariff tantrum sell off. Right, so not only did we have veracity, right, we had a lot of strength. The magnitude was high. The persistence was high. So magnitude plus persistence, right, is a strong force to deal with in general, right? Because you have, right, if you think about maybe physics, force equals mass times acceleration, right? So acceleration was high, and then we had persistence of that acceleration. So this to me is another way to kind of quantify the thoughts behind a breadth thrust. And I'm actually going to work on it over the weekend, over the next couple of weeks with some guys to kind of see if we could quantify this in this signal overall. Because as you can see, it tends to come from capitulatory levels, and it's something to take a look at. So now almost closing at new highs when equal weight was down to its 200-day, right? So that reversion is exactly what we wanted to see, exactly what the bulls wanted to see. So like I said, that was the shake and bake that we saw in the market this week, and the bears are getting cooked from it. And it's something that's great to see. Now what's next? So wanted to take a step back and I wanted to talk quickly kind of more about Marty Zweig, his book, Winning on Wall Street, and kind of his investing rules. So he laid out these investing rules, 17 of them. And I'm not going to spend today going through all of them. You can look them up on your own, but it's just something he presented to the Market Technicians Association back in 1990, April 11, 1990. And I just wanted to highlight a few quickly. The first one, just the trend is your friend, don't fight the tape. And then, right, adapt to change. Those are two things that always stick out to me. Adapt to change, because market regimes change. We have historic concentration, and you see a lot of dogma in the market around this is what happened. And you'll see people quoted a lot of times from something they said in 1970s. And the market is different from the 1970s, but it's similar in a lot of ways. So have a brain in the nuance to understand what is the same, humans, right? And what is different. The concentration is different. So I've been preaching this for a while, like the rotation that people were talking about, it couldn't be bullish. Why? Because when people were saying that back then, concentration wasn't what it was in the S&P 500. So just understand those two things is that don't fight the trend, right? But also adapt to change, because dogma is when you don't adapt to change, but data can change and then you can provide nuance to that. Do I think rotation can be the lifeblood of a bull market? Sure. But can it be the lifeblood of a historically concentrated bull market? No, it just doesn't make sense mathematically. And then the last thing I wanted to highlight from Marty Zweig is he says, don't fight the Fed, right? Less valid than number one, which is the trend. So I'm sitting on a space this week and kind of laying out my thesis, and someone brought up a bunch of big brain stuff to me. And I was just like, went back to these rules and how if the Fed is going to be in an easing cycle and the trend is going to be up, what are you doing, right? What are you doing over analyzing everything else that's taking place? It just, to me, it doesn't make sense to do that. So just understanding those nuances, I think, is important to the market. So shout out to Marty Zweig, shout out to Jeff DeGraff, shout out to Subu Trade, who kind of showed us these breadth thrusts as a whole, and then just kind of how to quantify, because I think it's going to be lead to some follow through in the market, but maybe choppy action in the short term. So next chart I wanted to show here, still sticking on this breadth theme, is just kind of the S&P 500 equal weight and how we tested these very logical supports in an uptrend. And what are we seeing? We saw that follow through to the upside. So that's what we wanted to see. Now the question is, can we break out to new highs? Who knows is the answer, right? No one knows that. But I think the importance of this, the reason I wanted to highlight this chart was, I see a lot of times people talking about, I want to see more follow through. I want to see more follow through. I want to see more follow through. Well, one, everyone wants to see more follow through in the market, right? Everyone wants to see everything get better, right? But the market doesn't always allow you to wait until you're comfortable to invest, right? What you have to do is you have to play the hand you were dealt when the risk reward is favorable. And when was it favorable? It was really favorable when we had that one up day, right? Because you had well-defined risks to the downside against this 180, this plethora of support. Now we've seen the follow through. Now it's, oh, well, we're at the top end of the range. Exactly. So if this is still a range, now we're at the top side of it. So we could see this just metal back and forth, but that's why you have to be prepared to trade the hand in front of you instead of predicting the future, because no one is saying anything when they say they want to see more clarity. What they need to say is like, what is the hand that I'm being dealt and how can I play it to my advantage? And the advantage was last week. I wrote an article last Sunday. The bounce, right? The tradable lows. We had tradable lows. We saw some strength follow through. We need to see those breadth thrusts, but right now we're at the top end of the range, so we don't know if we're going to see follow through. But if we do, right, you want to stay long. But if we start to correct here, then you have favorable risks to take off it because we might stay in this range that we're in. So now let's kind of get into some of these individual charts. I just wanted to walk through some individual charts this week. I think I don't spend enough time kind of sharing some individual charts. That's my Sunday stock list. So if you're not subscribed to that, it's all free, right? All of this work is free. But the Sunday stock list is where I really kind of break down the setups for the week that I like. And what I wanted to do is just kind of zoom out on a couple charts and show you why it was kind of silly to be getting short because downside doesn't typically see follow through. So something like Tesla is a great example where you had, if you zoomed out on the chart, you saw the 400 was former support, right? You had the polarity level here where it's resistance, resistance, and it's turning into support here. And so that's kind of that 400 level is the clean level you want to manage risk against in something like Tesla. It's such a large component of consumer discretionary, the S&P 500, that then, okay, now you had the clean risk reward. Well, now that risk reward isn't as clean because now we're up, right, 9% in a week. So that's where focusing on trying to predict the future instead of the hand you're dealt sometimes leads to less favorable risk reward. And the more confirmation you wait for, the less you're going to catch of the move, which is okay. I'm not saying that's not okay, but just realize there is no perfect formula, because in trend following, you're not going to catch the changes, right? You're not going to catch the top and you're not going to catch the bottom, right? You're going to get in after the bottom, you're going to get it out after the top, but you're going to catch the meat of the move. So partnering that with tradable low systems or mean reversion systems helps you at least maybe garner some of that getting out early, getting in early, but you might also get whipsawed if it is a mean reversion move. But that's how you can kind of partner those systems. I recommend checking out someone like Michael Noss, who does systematic trading, but that's how you can partner those two systems together to complement each other, because both have trade-offs, and that's a trade-off. If you're going to wait for follow through, you're gonna miss some of the move. Next chart, I want to talk about Amazon, a different look, right? So if you zoom in on Amazon, you can see we bounced off the 200-day, which we've done multiple times, but now we're rallying into overhead resistance. So here is something where this is probably more of a mean reversion chart, where there is a long-term uptrend, which is great, but now you're at the top side where there's overhead resistance. RSI really hasn't gotten back above 50 yet in a strong, vicious way, like we saw in that Homebuilders chart. And so this is something where you have to look at each chart on its own individual basis and then figure out that hand, that poker hand that you want to play with it. And Amazon is one where nice bounce, love to see follow through here, which we'll talk about. But the risk reward here to me is not favorable to the upside, right? It's almost favorable to the downside, where you could, in something like this, you could take it short, right, to maybe manage some of your risks that you have long in something like Amazon. And maybe it falls back to its 200-day, right? And you clip a little bit, something like that. But overall, this is not the one where it's like, oh, now the risk reward's good, because you have to take the charts on an individual basis. Another one very similar to it is XRT. I think I showed this chart last week. Don't short the whole, right? We had the RSI divergence. We saw the follow through. RSI actually getting above 59. So we're seeing follow through in something like XRT. But now we're sitting at this overhead resistance, this 85 level, where in the past we've seen it be resistance in a chart like this. So this is where these charts, I'm a little more cautious. Great short-term tradable low. Don't know if we're going to see follow through here. So maybe you set a trailing stop as like 2 days ago lows or something like that. But overall, great constructive action. Now we might chop sideways because, right, if you think about maybe a rocket, the rocket needs that thrust to get off the ground, and then it kind of slows, right? The acceleration decreases, right? But then it continues to go up. So that's what we want to see in something like this. If we do see a pullback, we want to see RSI kind of stay above 50, where it's served as resistance kind of in the past. We want to see RSI 50 turn into support. That would say that momentum stayed with the bulls, and then seeing that follow through. Because this, to me, is one of those, the bottom K of the economy, similar to housing, where if we see this side of the K catch up, it can kind of help the rest of the market as a whole, especially from a breadth perspective. Next chart I want to highlight, right? This is one we talked about last week, but wanted to zoom out a little bit on this Homebuilders, home construction ETF, right? Beautiful bottom, right? This is not necessarily trend following to a degree. It's a little bit of bottom picking because you had clean risk reward against this 200-day. And you still do, right? The 200 days at 98, 104, you get long, you're out at 98. And I brought this up again, and someone was like, well, what about housing and Trump and the future of this? I think it's dead money. And I don't have a crystal ball, right? No one has a crystal ball into the future. So we just trade the hand in front of us, right? When you play poker, you don't know what the turn's going to be, right? You don't know what the flop's going to be, but you look at your hands, you understand the risk reward, and then you think and you place the bet. There's a famous book by Annie Duke, professional poker player, called Thinking in Bets. That's how you have to think about the market in bets, right? Too many people want to think about the market from a crystal ball voodoo perspective, but that's not what it is, right? It's thinking in bets. And we just had this follow through this week. And this is great to see because if you can see in past, this has been how this has rallied. It's kind of had some drip sell offs and then rallied, drip sell offs and rallied. So this year end rally in home builders could be something where you trade it and could it correct? Sure. But you have tradable levels. And if you look at some of my work earlier this year, I was trading this low that we had earlier in the year, not with the intention of home builders were going to be the next hot stock and they were going to be up 5,000%. Like, I'm not trying to sell research. I'm trying to make money trading. So I had no need to like have these grandiose thoughts and opinions. It was just clean risk reward. And I think you still have that in something like home builders. And part of that equation, right, is bonds and yields and this base that continues to build in treasury notes, right, in the bonds. So one of the problems you see a lot of times with the media and the news, which is okay, like everyone has weaknesses, including myself, is that you see these bases take a lot of time because they're messy and they need to work through overhead supply. And you see that with yields, right? They've been trading sideways. But eventually these start to break out and you can just add positioning slowly but surely in something like this. But it's kind of when they get to the top side of the range that the news and the media gets really, really big, like rates are about to collapse because of the economy. But the bottom is telling us, hey, this might take a little time. So you position accordingly, right? You just position accordingly in something like this. And what I like about this setup is one, lower yields, right, is not fighting the Fed, which Marty Zweig talks about. And then we have a lot of uptrends in place in the market. So that combination is a reason to be an optimist and stay bullish. And what I want to see here is you have RSI, right, up 54 and it's kind of pulling back. If we can retest this 200-day and this recent high AVWAP and see follow through to the upside, that's once again a tradable low, maybe a way where you add exposure and continue to kind of get exposure to yields over time. Or to bonds, right? The inverse of yields. But I think this is something that is still in play, even though it's been messy, because we're still making higher lows and we still have price action that's supporting it, regardless of the constant tension in the media around it. Similarly here, we have consumer discretionary, very similar to that retail chart. This is once at the top end of its range, sitting right at its 50-day. Right, you have this clean risk reward level if we continue to see that follow through or if we see a dip, right? This is to me still just messy. Some of these areas of the market are still messy. So that's where you use that top down regime filters, right? You look at the breadth thrust, you look at what is reclaiming key levels, and then you see areas in the market if you're right trying to have a little bit of a delta neutral book, right? Maybe some long shorts where you can look and you have a dispersion where certain things are rallying off of support and certain things are rallying into resistance. And maybe you pair trade against those types of things. That's just kind of what I wanted to highlight with something like consumer discretionary. So healthcare, in terms of individual charts, I really like. I really do like healthcare. I think a pullback to 155, even 150, you buy this all day. The reversion, right? The basing and bottoming pattern, I think in healthcare is complete. And now it's just a matter of buying some weakness after this really, really strong run, because it's going to have some weakness, especially if those risk-on areas of the market kind of take fold. But this is pretty diversified. So I do like healthcare if we do see a little bit of a pullback here, right? Its RSI is in 75 range. So it taking a breather is something that could be warranted. And I think that breather is something to buy. Apple, another chart I like. I think, right, trading sideways during a lot of kind of the pullbacks we've seen in the market. If this can kind of break out, I think it's another area of the market that you could have exposure to, because this is just a bull flag. It's just bull flagging sideways as other areas of the market kind of corrected downwards. I think Apple is something that continues to look good. We've talked about the robots. Right, this was one of those clean risk reward levels where you had that breakout pullback right against $100. So not only did you have leadership, you had it right against $100. You had RSI right near 50, which is where we tend to see those bounces. And that's why when you're doing technical analysis, you use that long-term time frame, and then you can zoom in and get a more tactical view of the market. So these pullbacks were kind of rough. This was like an over 20% pullback, kind of rough. But if you were looking at it from a longer term lens, you maybe saw this as an opportunity to hold your nose and buy, not because you knew it was going to rally 8% this week, because I didn't know that, but you knew if you were going to be wrong, you were going to risk $2-3. And that's, like I said, the thinking and bet side of it. So ARC-Q, ARC-F, all those areas of the market right now kind of look like this. You have the huge base breakout, pullback, kind of follow rally. So continuously follow through there, bullish for the market, right? Inflation beneficiaries kind of get you diversified away from tech a little bit if you have a lot of tech exposure, right? INFL gives you financials, energy, materials, real estate, utilities, right? That fake breakdown, that shake and bake type pattern, back above that former high AVWAP that I liked around 43. So kind of fake breakout, fake breakdown. It might just stay in this messy range, but it's something if you're trying to just get more broad exposure because you think, right, if Fed lowers yields, inflation might rebound. It's something that I think looks good overall. And then psychedelics. I think this psychedelic ETF PSIL continues to look great after this pullback, right? It's up 11% this week. But what you can see in this is that this is a long-term chart, right? So I'm focused on the longer-term trend. I'm not day trading this. I've highlighted it several times, kind of on this breakout, and right, saw some pullback that right isn't pretty necessarily sit in, but when this is the chart you're looking at, you give it a longer leash because you're looking at a longer time frame. So I think you had a strong rally here. RSI is above 50. This looks like it's reversal, blah, 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 blah. Reversal pattern is complete. You have low overhead supply. So this left side, this is just volume by price. So where a lot of the volume has transacted is actually below here. So this might be people accumulating shares. And then now we don't have a lot of sellers above these prices. So you could kind of see that rally continue, and you kind of see it be bought, and strong uptrends on weekly charts tend to stay above 50, right? So look at something like ARC-F or ARC-Q, RSI staying above 50. Look at something like psychedelics ETF, RSI staying above 50. Good way to see those long-term uptrends. And then I wanted to highlight two areas of the market that look more like dead cat bounces, because not everything looks great here. One I'll highlight is Bitcoin, the IBIT trust. This has a lot of work to do, right? It got oversold, and oversold bounces occur, right? We saw with breadth, we saw oversold lead to overbought, right? We saw a veracity of reversion from weak breadth. This just looks like it got a bid like most things did in the market, but it's still kind of sluggish and still needs some ability to rebound. So I don't understand the excitement and the hype right now around it. I don't see it. Same thing with software. Like if anything, this software rallies to this April low AVWAP, right? Rallying into like overhead resistance, not really even RSI, not even above 30, above 40, right? You can take software, short software against maybe a long semis position, right? Or short software against something that you like, that is finding support with RSI above 50. So like ARC-Q, right? Maybe you buy ARC-Q, you short IGV. That's kind of that pairs trade. But yeah, there's some areas of the market that I think also still haven't shown those signs that they have life yet. So that's it, guys. That's it from me today. I hope you guys enjoyed Thanksgiving, enjoyed the long day off yesterday, got some good food in you. Get a lift in. Get a lift in. Go work your chest or your arms or something, your legs. Get a good pump, right? You got all those extra carbs, all the extra sodium in your diet. Actually, Gene, I'm gonna do one thing real quick because I think I have a couple charts I need to share. I am gonna quickly pull up my software. It's okay if it doesn't look great. I do want to give a couple chart requests that people gave me. So let me do that real quick. So there was really two chart requests that people asked for. Roblox, someone asked for. So this is Roblox here. And with Roblox, right, you're rallying. This looks like to me like those software charts. Like it's not the prettiest of rallies yet. You're below the 200-day, this golden line. You're below an AVWAP, which let's actually edit this and put this at this earnings AVWAP. Right, so you're below that earnings AVWAP. Let's add another one. You can see two big earnings sell-offs. And then let's add one more against this other earnings. I like to anchor them to, so you're below all three major AVWAPs in recent history. You're below the 200-day. This to me, below 100, maybe short it, right? Maybe it's a good, you short this kind of downtrend that it's become into overhead resistance. This isn't something I'm buying yet until we kind of get above these key levels. Right, longer term, sure, it's an uptrend. Like if you zoom out, but short term, I don't love the way it looks. Let's look at a zoomed out chart real quick. So yeah, if you're really long term, this is a monthly chart in something like Roblox. Let me just draw this real quick. All right. Right, where one person shorting, one person may be buying. If you really zoom out, right, on Roblox, you can kind of see against 100, right? We get back above 100, right? That's a good risk reward on a really long time frame because this chart has kind of had a big base, but I would kind of stay away from until we got back above 100 if you're looking for the long side. And then TEM was the other chart. So this is a longer term chart. Let's zoom into that daily and kind of see what's going on, fill the chart. So kind of against some of these earnings, I don't see anything beautiful here to look at in something like Tempest, AI, medical equipment. I think, right, healthcare is doing really, really well. Why is this not doing as well as other healthcare? I don't know the answer, but not something I'm super interested in overall. So those were kind of the two charts that people reached out about. Someone also asked about copper. I will defer to my friend Sam Gatlin, Gold Rush, and Jason Pers at the Gold Rush. I'd look at some of their work around copper. That's where I get a lot of my metals and mining stuff. So with that, guys, I hope you have a great weekend. Remember the rules that Marty Zweig laid out. Also, comment, overrated food from Thanksgiving, underrated. Underrated to me is turkey. I think people don't give turkey enough respect. Overrated, I think, is stuffing. Tune in to Sunday Stock List tomorrow, Sunday. That's where I'll highlight a lot of more of my trades. Also, watch last week's video and maybe also Sunday Stock List. And then give this video a like and a comment. That's an easy way to show some support. I don't ask for any money or anything from you guys. I just love doing this. But that kind of helps the channel grow. And, you know, it's nice every now and then to be loved. So thankful for you guys. Have a great weekend. Cheers.